Oops. All right. So I'm going to start off by just kind of going over the topic, and then I'm going to introduce our panelists. As I mentioned, our topic is on price. Bitcoin's price, it's volatile, controversial. People argue over whether it has value or gives it value. And there seems to be endless views on the future of Bitcoin and what its price might be. The really only thing that seems clear about Bitcoin's price is that hindsight's a bitch. I'm really excited about the topic tonight because the idea of doing a talk just about price, usually you go to events and it's sort of a bit taboo. You want to talk about the technology behind it, or the community, or where it might go, or the social good. And talking just price is considered, that's not what this one's about. It's not really the whole point. But the economics of Bitcoin play a very important role. It reflects adoption, it reflects people's perception of it. So to pull that off, we have a panel tonight of stock market and traders and just industry leaders. And to go ahead, and I'll just start right here with Stephen. Excuse me, Stephen Michaels. Stephen Michaels, he's the president of Digital Currency Institute, which offers education and certification services, a lot of consulting on Bitcoin. He has a long background when it comes to digital currency and economics, primary background. Bitcoin consultant, trader, and investor, as I mentioned. And in addition to Digital Currency Institute, Stephen is the creator of the CoinKey Bitcoin tool and founder of TradeBitcoins.com. Quite recently, actually, October 29th, I believe, Stephen hosted the Bitcoin Investor Conference in Las Vegas, which I heard went very well. Unfortunately, I couldn't make it. Yeah, and I had a lot of great speakers there as well. Sitting next to him, we have Dave Ripley of, excuse me, we have Dave Ripley of Glidera. Dave Ripley is the co-founder and CEO of Glidera. You may have noticed that we had Harry Ye originally on the panel. Unfortunately, he couldn't make it the last minute due to missing his flight. Dave very kindly stepped in at the last minute. It's actually really lucky to have him here at all. Usually Dave's in Chicago, he couldn't make an event like this, but he was in town. So CEO of Glidera. Glidera, it's an exchange that interacts with, one of the things they do is they interact with wallets, like Airbits, for instance, one of our sponsors, and other wallets as well, kind of giving people the option to buy and sell Bitcoin directly on their mobile device. Dave has an engineering background and has worked for mobile software companies, large consulting companies, and more recently a lot of financial services and fintech sector as well. Lastly, of course, we have Ton Vays. Ton Vays is the head researcher at BraveNewCoin. This is where you can find his latest work. He's an expert on Bitcoin, economic trends, trading, risk analysis. History includes working on Wall Street for, I believe, 10 years, about 10 years. Almost. Yeah, almost. It started off with risk analysis at Bear Stearns, and then later actually became VP at JPMorgan Chase following the aftermath of the financial crisis. Involved in cryptocurrencies since around 2013. Very active voice in the community. I've probably seen a lot of the interviews he's given, helping people better understand current financial systems. Used to write for CoinTelegraph as well. You can actually follow him his blog, LibertyLifeTrail, which focuses on economics, privacy, and travel. And Ton holds a master's degree in financial engineering from Florida State, along with bachelor's degrees in mathematics and geology. So the first question I want to ask you guys, to kind of maybe fill in some gaps, is sort of how you found yourself here today in terms of your background, how you ended up in this space. I'll just go ahead and start with Stephen.
Sure, you bet. First, thank you for having me here, and thank you guys for coming out on the Star Wars night. So I know we would all rather be there, but thanks for coming out. But hey, we're talking about space right here, right? Now, Bitcoin's going to the moon, in my opinion, so we have our own fireworks, stories to tell. My background is, for a long time, I've been involved in the asset protection and privacy world. I got introduced to Bitcoin early on. But I was obviously a privacy guy. I was very private. So, so to kind of fill in those gaps, before Bitcoin, I've been a long time. I was a former precious metals dealer, a student of Austrian economics. I'm also a very pro-liberty, pro-self-ownership kind of person. And I was involved with, how many of you have heard of the e-gold or the other previous gold-backed currencies back when? And did any of you ever own any of those back then? Can I see a show of hands? There's a few of you guys, and that's great. So when we first heard about e-gold, we thought, this is the holy grail. This is a truly incorruptible currency. We have limited supply. It was backed by gold or silver, and we as people who were advocates for individual freedom thought this is the tool that's going to make it a better world for all of us, right? It was but it had two fatal flaws, and one was that it was backed by something, and number two was that it was in a centralized database, which was easy to take down. And so anyway, that crashed, and I kind of set the digital currency thing aside for a while until I believe it was January of 2011. I got an anonymous email. The only thing they sent me was the white paper. And I looked at it, and I wasn't really paying attention at the time, but because I quickly discarded it because I was still thinking like e-gold, that it had to be backed by gold or silver. So I set it aside and didn't pay too much stock to it. One of the most expensive mistakes of my life. It was about $1 at the time. But it was, fast forward 6 months to June 6th of 2011. Anyone remember what happened at that time? It was the Gawker magazine article that came out that said, introducing the Silk Road, where people can buy and sell contraband anonymously and securely with this incredible new digital. And so that perked my ears up real quick. I said, if this is a tool that even the most persecuted minority of our civilization can use to help to protect their life, liberty, and property, then that's good enough for me. So I've been hooked ever since. So that's kind of where it's been. It hasn't been until recently that I've started getting more involved in different things. So I'll stop there because I went way too long. Good, David.
Yeah, thanks for coming out. Great to be here with everyone as well. As Travis mentioned, I started my career in the technology industry as an engineer. In undergrad, I came out and worked in the mobile space. Quite early days. The first and most popular mobile device at the time was the Palm. I'm not too sure if anyone's heard of that here, but that's about where I am from a timeline standpoint. I spent a number of years there in engineering, product management, went off to business school, worked for a large strategy consulting firm after that, where I did a decent amount of work in financial services and M&A, mergers and acquisitions, did a lot of financial stuff. Kind of latter part of my career in the finance space led me to a place where I was very much interested in getting back in technology, and fintech was clearly a natural place. And right around that time was when I learned about Bitcoin as well. There's obviously for me kind of experiencing the early days of the internet. It's cliche at this point in time, but there's a huge amount of similarities between the two in so many ways. And then similar to Steve, kind of the potential not just for growth and all kinds of interesting use cases, but kind of the ability to really democratize finance the same way that the internet has helped democratize information across the globe. Just kind of intrigued me even more so. So that's kind of what brought me here.
All right, so I guess my story is kind of similar to Steven. I'm a little unique in the case that no one ever told me about Bitcoin. I never had any friends, no anonymous emails, sent any white papers. It was something I actually discovered on my own. And just like Steven, I waited a little too long, so it was also the most expensive mistake of my life. I first heard about Bitcoin even either late 2010 or early 2011 during the talk of WikiLeaks will start accepting Bitcoin. So that actually caught my attention. I believe WikiLeaks, what was first suggested for WikiLeaks to take Bitcoin when they got cut off from credit cards and PayPal in December 2010, Satoshi Nakamoto suggested that they shouldn't. Those details I didn't know at the time, of course. But eventually, right around that same time, in June, July of 2011, WikiLeaks eventually started accepting Bitcoin, and that's when it first got on my radar in that early 2011. But I didn't really have time to even Google it. I just heard about it, I thought it was interesting, didn't do anything. In 2012, it ran across my radar again, just reading blogs and watching alternative media. And I Googled it in 2012, and everything that came up was about mining. I had about a 10-minute break at work, well, back when I was working like 10 hours a day. And I took a look, and I looked at this mining stuff, and I'm like, I'm not gonna do this. I don't have time for this. I'm barely home on my computer anyway. Ignored it again. But then in 2013, as the Cyprus events are happening, that's when I became really, really serious. And I Googled it again, and the first thing I saw was local Bitcoins. And I just remember just saying out loud in my apartment, you mean I could just go and buy this stuff? And that's when I finally set up and went out and got some.
I mean, the first question you guys usually probably get at events like this, discussing trading or price, is the future of Bitcoin, near future, what's going to happen to the price tomorrow. But I wanted to go over Bitcoin in general, kind of try to figure out why it behaves the way it does. So I actually want to start with the price, which is quite good because you mentioned, I mean, Silk Road, Cyprus, you know, these sort of events that sort of got you onto Bitcoin in the past. And these are events that were important to you, WikiLeaks, et cetera. But what would you say were important moments in Bitcoin's early price history, important for Bitcoin?
So I'll just jump in and start it, I guess, again. So early events important for Bitcoin. I think, you know, in retrospect, the 10,000 Bitcoin pizza story was a big one because it was a cool story, a cool idea. It was the first Lorenzo, right? Yeah, I forget the name exactly. It'll come to me, but it was the first, at least I should say advertised, but widely known Bitcoin transaction. And so I think that was a pivotal thing. So basically a market began to develop. And it was, in the early days, from an ideology of let's remove the power of money from these centralized power structures. And so it was created by idealists and people who tried with the e-gold and those other currencies and failed and learned from that and came back to the drawing board and came up with something newer and better. So I think that was the first thing that they
Just so people who aren't familiar, what was the pizza event?
So the pizza event was, is it Laszlo, I think Laszlo was the handle, right? So, okay, and so he was an early miner or buyer, trader of Bitcoin, and he posted on one of the forums, he said, I really want some pizza right now. I'll give 10,000 Bitcoins to whoever orders 2 pizzas and has them delivered to my home. And someone in Europe took him up on that and ordered 2 pizzas, delivered it, only sent him 10,000 Bitcoin. And so that was kind of the first, you know, publicly well-known transaction. And it's just kind of interesting to see how it's developed from there. So I can go into more detail on, you know, what happens in the ups and downs.
In a lot of ways, that helped set the price as well.
Right, yeah, it was, you know, the pricing, the discovery mechanism in economics, you know, price is a discovery mechanism, and people were discovering its utility, and they started trading for it. Dave?
Yeah, I mean, I'll probably call out, I might be skipping over a number of events that Tom might say are more important, but I'll let him fill in the gaps. I'll probably go with Cyprus, being an interesting one. And, you know, it's difficult for many of these events to actually assess, you know, precisely the impact that they actually had on the price. You know, there wasn't, I'm trying to think the time frame was, you know, what, March 2013, roughly?
March into late March, early April.
Yeah, late March, early April. And there was, due to, you know, Cyprus and the kind of macroeconomic situation in the country, price controls and all kinds of you know, different, you know, difficult, you know, situation for citizens there, similar to what we've, you know, saw recently in Greece, and we see in many other different countries. And there was a huge amount of news that, you know, individuals in Cyprus were, you know, fleeing their currency, buying, they were buying Bitcoin, and the price just shot way up. It was the first time I guess it had crossed the $200 barrier, went to 220 or something along those lines. It's interesting. Was that in fact all Cyprus individuals actually on the buy side driving that price all the way up? There's a real good chance that it likely wasn't. It might even been
the news of the event.
Exactly.
Yeah, I would take it further. If there were more than 5 people in the entire island of Cyprus buying Bitcoin with all the money they had, I would be surprised.
Right. And so a lot of these events, they act as something that generates awareness for the globe of, potential Bitcoin buyers.
A lot of press.
Yeah, exactly. And so, but that was one specific time where people across the globe actually realized, the potential of this, and the buyers kind of came out of the woodwork in a lot of different places.
Yeah, no, and I agree with that. It's the price of Bitcoin is just a reflection of people's confidence and speculation on Bitcoin ecosystem in general. But I actually see the importance of events correlate pretty well with the price. So Bitcoin's biggest bubble was in 2011 when it went from $1 to $30, so 30 times. And it's never one thing, it's always a few things. And in that case, it was the combination of Silk Road and WikiLeaks. To me, WikiLeaks was more important. And this is the time where, damn, I really wish Silk Road was important to me for those services, because I would have been a very early Bitcoin adopter. Unfortunately, that wasn't the case. But also, what you mentioned was the Gawker article. What I actually focus on is the 30-minute video clip of Senator Chuck Schumer going on CNBC and providing the best 30-second tutorial on what Bitcoin is, how to buy things from Silk Road, and what Tor browser is, all in a beautiful 30-second advertisement. That significantly helped taking the price from $1 to 30. So that's the most important event.
You call that educational.
Yeah, and it did the most price. Then Bitcoin went up by 20 times from early March into April, and that was a combination of Cyprus, and the Willy bot started doing its thing in early 2013 as well. So that was the second biggest bubble, and that's the one that finally got me and a lot of people that I know into the space, and that was a 20 times perspective. Price is, oh my God, they're taking away money from people's accounts. Bitcoin can serve as protection. And the last one was the bubble from 100 to 1,000 in late 2013. And again, besides the Willy bot, what I think drove that was the positive Senate hearings in November, early November. And that also put Bitcoin on the map, that it's now on government's radar. And that took it 10x. So I think it was interesting that the price correlated with the events, and the importance of events, I believe, also went slowly down in its importance.
You mentioned investor confidence having a big role, and obviously the Willy bot, which was, where it was a bot that was trading Bitcoin on Mt. Gox. I don't think we can really afford to ignore Mt. Gox, its contribution and its legacy to the price. What would your comment like on that? I mean, is this an isolated kind of influence?
Maybe my opinion is a little bit biased. I kind of still give a lot of credit to Mt. Gox because I didn't have any Bitcoin on Mt. Gox, perhaps. So I wasn't financially affected by it, but I think it was great that they took the initiative. They were the first exchange. They created price discovery. Granted, it was terrible. I mean, they have no business being in the financial sector. But also, people have to keep in mind that Bitcoin became really popular, and they were the only exchange. And I don't know if anyone here has worked in an environment where the number of people in your company go from about 7 to about 70 in the span of a few weeks. Things are bound to go wrong. That is just not sustainable growth of a company either. And things obviously went horribly wrong. I'm also glad there was no regulation at the time, so they were allowed to quickly go bust and the free market adjusted. People always talk about regulation, and my reply is, well, if Bitcoin had regulation, imagine if Mt. Gox got bailed out. I think it was a very good, overall in the long run, I think it was not a failure, but a successful free market.
I mean, Dave, as CEO of an exchange, I'm very curious to hear your thoughts.
Yeah, I guess this maybe deviates just a tad from price, but I agree with Tone that there's some significant benefits that came from Mt. Gox. Although tragic for many, many individuals and users and so forth, it definitely was a story that really delivered the message about kind of the custodianship within the Bitcoin ecosystem and the huge amount of risk associated with it. And from that time forward, there's been a huge amount of investment in security and user-controlled security, and I think that Mt. Gox actually was something that was, in its magnificence of failure, was something that really drove the industry towards that at a good time. Fairly Bitcoin, and that's been kind of a fantastic outcome of it, that it really woke everyone up and said, oh, okay, we need to think about security differently.
And it also created a lot of skeptical early Bitcoin adopters that are now helping going forward. I mean, one of the best statements I hear is, you're not a true Bitcoiner until you've either been scammed or someone has stolen at least some Bitcoins from you. Because that's when you truly become a Bitcoiner. We're still in those early days, even today.
The price being driven by all those early changes, at least now it's definitely reflecting. It's very important. Security is very important now, and people's relationship with Bitcoin now. In the early days, I gotta imagine what influenced price was very different than what influences price now, or is that how would you think?
I would say the same things influence price. I have a saying, it's not my saying, I'm sure I stole it from somebody, there's not much new under the sun, but capital and talent, but in this case capital always flows to where it's respected and protected. So in the asset protection industry, historically money went offshore because of lower taxes and privacy. And that began to change over the years to where you had things like FACTA, you had the US influence on other countries that basically, they strong-armed other countries to give up this privacy for people. And so now this capital is searching for safer havens to go reside or to go park. And the problem with these traditional things like offshore banks and places like that is you had counterparty risk. You had to trust your money to some guy halfway around the world to keep your secrets private. And hopefully there's not someone inside that institution that'll sell your info to some taxing authority or something. And so that's how I came into Bitcoin, because I saw that, hey, this is a place where people can now remove counterparty risk, and they can make rational economic decisions because they know what the supply is going to be of the currency. Whereas now with the Federal Reserve, we don't know if they're going to raise rates, lower rates, ease, expand, contract the money supply. How much of it is getting printed in the back room, financing all these secret operations and paying people to spy on us, and all these black budget operations. You can't plan economically for your future. So historically, since the Federal Reserve was created, you were not paid to save. You had to quickly find safer places to move your money. And so coming back to your question, the thing that drives value is always how can I preserve my wealth, that store of wealth feature of an asset. And so Bitcoin just happens to be one of those assets, which I feel personally is one of the ultimate offshore bank accounts, because it's in cyberspace. It's everywhere and nowhere at the same time. And it renders capital controls meaningless. And you can cross borders easily, and nobody knows that you have access to this wealth. So it's a very empowering tool for the individual.
Do you think that's a main, everything you're discussing is a driver of adoption, or are there other things that kind of bring people on board?
Yeah, that's the first thing. It's a safe haven asset. And as individual property rights are, how should I say, intruded upon more and more in the world we live in, it pushes more money into these safe haven assets. So
there's definitely a political idea behind Bitcoin. I'm curious though, I mean, in the day-to-day trading though, does that actually have much of an impact in the price? The idea of, who's in control and how decentralized it might be?
Absolutely, I would say so. I mean, yeah, if you see an asset that you can park your wealth and keep it out of reach of others, that word is going to get around and the price discovery goes to the market. Now we go through mania and despair in the market, overbought and oversold on this long time. But I think we're going to see volatility all the way until Bitcoin becomes the dominant unit of account, the primary unit of account. And at that point, it may settle and everything will be priced in Bitcoin. It won't be priced in dollars or yen or euros. So we're going to see many of these booms and busts along the way, but the trend, I feel, will long-term be up until all it has to do is not break, because central bankers and governments are going to destroy their currencies like they've always done. So I put my faith in math versus central bankers and politicians.
Yeah. How about you, Dave? Do you think that's a primary driver of adoption and price?
Yeah, I guess as I mentioned earlier, I kind of represent exchange operator, if you will, but our service is a bit different. We kind of integrate with various different wallets, and so that means a couple of different things. One, I interact with a lot of different wallet developers and talk to them about where they see adoption of their wallets. The other thing is all of our customer base, if you will, are mostly end consumers, because we're not actually an order book exchange, if you will, or more of a broker model. So a couple of things on this. One, very interestingly, in talking with several wallet developers and sharing some of their metrics on where they see adoption. There are some Bitcoin wallets out there where their number one country for adoption of a given wallet happens to be Russia. Number two is actually Ukraine for this particular wallet that cannot be named. And so literally those two countries alone account for almost a third. So I do think there are there's actually an interesting story that starts to evolve in the developing world, where individuals are using Bitcoin as a store of value that is superior to their alternatives that they have. The second thing is, just on the consumer end, we don't operate in those countries. We operate in the U.S. and Canada currently, where we actually serve customers. Consumers are actually a bit different than traders as well. They tend to sit mostly on one side of the buy-sell spectrum, and that's the buy side. So they buy a lot more frequently than they sell. That's just kind of the nature. They're interested in getting in, using applications, using Bitcoin for some purpose, whether it's sending it to other individuals abroad, purchasing, e-commerce, what have you. And so they tend to sit on the buy side, and they're also, well, of course, there's the various different use cases, but there's, in addition, among the group of consumers, many speculators themselves, and they definitely become much more active on the upswings and not particularly more active on the downswings. This doesn't really kind of increase there. So I think there are a number of different use cases that are beginning to rise for people both here and across the globe.
All right, so I'm actually going to separate the two. On occasions, on those big moves, like the 30x, the 20x, and the 10x that we had, those were the cases where adoption drove the price. In between those, it wasn't adoption driving the price, it was trading that was driving the price. So I see the very early users, the users 2010, 2011 users. The early users were doing it for ideological reasons, the very early ones. So they were already in, those were discovered early for ideological reasons. Then there was the little Silk Road craze. So those were the big moves. Right now, I see the adoption is being driven by those that have to use Bitcoin because it's their only option. And some examples of this are people that are affected by CryptoLocker and need to unlock their computer, people that are using Backpage to support their, as a work environment, and they are now forced to go find Bitcoin in order to put ads up. So I see that as the current use of adoption. And those aren't huge, which is why I don't see Bitcoin going up really big. What Steven mentioned about people using it as an offshore bank account because they're going away, that's coming. I think that is what is going to kick off the next big bubble in the space. But I don't see it happening quite yet. So as far as the driver of price, over the last year or so, maybe even or you go into the very top, I believe it's just all trading, just all speculative trading. I don't think there's been any groups of mass adoption. And just as a note, when we say people parking money in these offshore hidden accounts, we're generally talking about people that have made all their money legally. We're not talking about people that have made all their money illegally. That is actually a smaller percentage of people that are caring to preserve their wealth. I don't know, do you agree with that, Steve?
Sure, yeah, and I always like to just define, we all know that legality does not equate to morality, right? So an example being, it was legal to murder Jews. It was legal to murder Mormons in early America. I don't even know that. I forget which state, Illinois or something. It was actually a law or decree that you could murder Mormons. So, so legal or not, the real issue is do you own yourself? And if you own yourself, then you own the products of your life, the products of your energy and talent and your productivity. And if you own those, then you should have full control over what you do with those things that are your property. And anything that attacks your right to life, liberty, and property is going to push you into self-defense technologies, which I consider Bitcoin to be one. So the more the state,
or the early adopters, like the Silk Road,
right, persecuted minorities, just like the more
at high risk, let's say,
yeah, they've been, I have someone once mentioned to me, says, and this is a black market operator. And again, remember the caveat that illegal doesn't, the flip side, illegal doesn't mean immoral. It just means the majority doesn't like what you're doing. And so this person told me he operated in black markets, and he said, I see every new law as a new business opportunity. And the reason was, it wouldn't have to be a law if it wasn't restricting what people wanted to do. And so it was restricting people's actions. And so whenever there's these barriers built to restrict people's voluntary associations or trade, it's like trying to ban sex, right? It's not going to happen. Or outlaw it. So people are going to find a way, and that creates market opportunities, higher risks, of course, but with higher risk come higher rewards.
And in Bitcoin, its volatility can be risky, but somebody is willing to accept a higher risk. And this is what happened with Silk Road. You see this is something that's going to keep happening as a driver of price law.
Absolutely. Well, first of all, if the state could have stopped Bitcoin, they would have done it already. It's too late now. They can harm it now, no doubt about that. But what happened is I call it BitLicense. Yeah, regulated somehow. So I call it the fatal conceit. They ignored it for so long that it became too big that now they just go in and shut it down like they did Eagle. eGold, all they had to do was go into the centralized database in Florida at Doug Jackson's office and unplug the computer and collapse the currency. If that didn't work, if they couldn't find his database, all they had to do was take their army and go invade the vault that was storing the gold and silver that was backing up this eGold currency. So when that collapsed, these very smart people went back, crypto anarchists and free marketeers, I call them, and they thought about it and they said, okay, it has to be its own commodity so that there is no backing that can be attacked, and it has to be distributed so there's no centralized database that can be attacked, so there's no head that can be cut off. And since that happened, that's why Bitcoin is here today. Otherwise, if they didn't have those two features, it wouldn't be here right now. And now it's just so big they can't do much to stop it.
And just a quick comment on that. So think about this. Steven just said that Bitcoin is too big for the government to stop. The market cap of Bitcoin is about, what, 6 billion? Maybe 7 at most. There are probably at least 300 people that we know about that have more than the market cap of Bitcoin as liquid assets. And Bitcoin is too big for the government to stop. Imagine when it starts to grow in value.
I mean, what's been motivating growth lately, you were saying earlier, you believe is trade. Does that include the recent kind of very positive run-up?
Yeah, I believe the recent run is mostly trader driven. I don't believe it's adoption driven. I don't see it yet. To me, the next level to kick off adoption, I believe, is going to come from Europe. Cyprus was, I guess, the pre-event. Greece was, I don't know, if we're talking like on an earthquake scale. So that was maybe like a 2. Just, you know it happened, but you kind of ignore it, thinking it can't happen here. I think Italy is next, before Spain, and those are going to rank about a 5 or a 6. And then when it moves up the chain to France and Germany, and the euro starts to completely fall apart, their agreements are already breaking down. The Shenzhen agreement of free movement of people across the region is already coming to an end, if it hasn't yet, between some nations, which I believe it has. I mean, the people have absolutely no vote in Europe, pretty much. They're all unelected politicians. And I think that's going to be the next driver. And ironically, I go to conferences all over the world. I haven't really been to the European conferences. I don't want to go to that region. I'd rather go to the region that's going to thrive. I just came from a conference in Asia, and over 1,000 people showed up. And conferences don't even do any events in Central Europe because there's nobody shows up. Nobody wants to know about it. This is the biggest irony of it. I believe there was a conference in France last year, like 30 people, 40 people showed up. This BitPanel gets a bigger attendance, and that was a multi-day conference. And that's the region that needs to understand it, because those are the people whose savings are in jeopardy from being confiscated by the banks, not the people in Asia. So I find that situation very ironic, and I think that's going to be the next big drive.
There's not a lot of awareness of Bitcoin here, and a lot of things need to happen first before that can occur. I mean, have to be educated on the idea. They have to start showing up at these conferences, right? Or you think that's not necessary?
Just one quick comment. I just think that people in those regions are just finally starting to wake up, but the majority is used to the government will take care of everything. It's becoming very, very socialist over there in that region, and partially in North America as well, US, Canada, Australia. And I don't think people are worried. People are on the border of Greece, Italy, right there, right next to Greece. Oh, it's just Greece. It can't happen here, even though our banks are in worse shape.
So people that aren't trading, you would suggest taking a look at the political section of Europe newspapers when planning out their trades as a main driver?
Not trade, just watch. The moment you hear a rumor Italian banks are in trouble, jump on it early, start buying Bitcoin, because it'll be too late for the Italians, but it will drive adoption everywhere else, just like in Greece. I don't think anybody in Greece was buying Bitcoin it was too late for them.
Yeah.
But people like in America and other regions really.
That was the big news that Greece happened. Everyone's like, oh, why did Greece buy Bitcoin? But they weren't set up for it. It was at that point their ATMs already locked.
Yeah,
Everyone still talked about
they're
it.
trying to get 20 euros out to buy food. You know, Bitcoin is the last thing on their mind.
And yet the price was still going up.
Oh, because everybody else is thinking that, oh, Greeks need to buy Bitcoin, or people woke up. They're like, yes, it can happen here.
Absolutely, on the Greece piece as well. They weren't actually buying Bitcoin, but they were generating a lot of hits and interest in searching and reading about Bitcoin, although they didn't have access to their fiat currency to actually do the buy.
And mainstream media picked it up. Mainstream media jumped on the angle. It's like, can Bitcoin save Greece? And the moment we see that in the mainstream media articles, Bloomberg, CNBC, Reuters, look at all of them. They ran with the story, and that really helped Bitcoin.
Yeah, more free advertising, right?
Oh, yeah.
But this is a classic example too, because you made the comment that do we need more education to drive? And my answer is no. And the reason is people are going to be educated when they see their wealth dissipating, when they're holding assets that governments can, inflate or devalue. So they'll be educated whether they like it or not. This is a classic example of how ignorance of economics can be very expensive. And so when you recognize the potential of Bitcoin, you look at it from an economic perspective, you realize that there is really no better currency out there, or store of value out there. I mean, gold and silver have their own problems, and the problems are they're hard to protect, they're hard to store, they're hard to transport, they're hard to divide into small pieces.
Bitcoin's, well, it can be in the future, hopefully. It's kind of hard to protect right now.
Well,
Very technical.
I gotta
Yeah.
slightly disagree with you.
Sure.
I don't consider, just real quick, I don't consider Bitcoin as the best store of value because it's still very, very volatile, and it's still early, and it can collapse tomorrow. I consider Bitcoin the best transfer of value.
Yeah, well, to transfer it, you first have to be able to store it. But I know we're splitting hairs here. So, but the point,
Store in longer term.
yeah, and I would say don't put all your wealth in Bitcoin either. I mean, obviously there is downside risk. It's something new and it's unique, but a little bit will go a long way if it does.
You're referring to like the hold philosophy. It's the idea, right? You just hold the Bitcoin.
Yeah, but I spend like crazy, but I buy more than I spend. So I'm a net accumulator. So I like to keep it circulating, but I also, the first use of it for me is a store of value that I get to spend once in a while too. And the beauty is it's a deflating currency, which means, it sounds bad, that's a good thing. It means your purchasing power goes up. So if this trend continues, which I seem to think it will, but if it does, this is the first time in a long time since before the gold standard, or since the gold standard, that it actually pays to save. You can save money in an asset that's going to hold its value long term and potentially appreciate, whereas we haven't had that in 80, 90 years since the Federal Reserve 1913.
Yeah, because the idea is that spending, consumerism drives markets. That's liquid markets. That's what drives markets. That was the idea. If everyone's sort of saving and holding, is that different for Bitcoin, or is that just?
Well, I don't accept that premise or that argument that spending drives markets. So. A lot of people use the term hoarding, and hoarding is the same thing as just saving. The person who is saving and buying or gold, silver, Bitcoin, whatever, and savings, that's serving an economic purpose for that person. They're not slowing down the market or taking things out of the market. They're actually, I love savers and holders because that drives the price up for the rest of us, because they're taking out of circulation. See, when someone buys something, like say they buy Bitcoin from you, what they're doing is they're withholding their claim on your products and services in the marketplace until sometime in the future. So it's kind of like a free loan to the rest of us. When people accept your medium of exchange and then they don't spend it immediately. It's an uncashed check, if you will. And so they're doing all of us a favor. The people who hold, I love them, and I wish there were more. But yeah, I can
In
go on.
terms of reducing the supply, I believe the ETA is around July 20th right now of next year. There's going to be this thing called the halving, where the blockchain reward is going to cut in half. Do you see that having any sort of effect on the price?
What you guys?
Yeah.
I don't think it'll have that much of an effect on the price because the last halving was in 2013. That's when the Bitcoin's price started taking off from $10. But that was the first halving of any cryptocurrency, not that I believe in altcoins, but that was the very first halving. And the only people that were positive was going to work were the developers of the Bitcoin code and those that can really understand it. Everybody else was just kind of hoping that it would work, and nobody was sure. This never happened before. Now that it's happened, and it's happened successfully across other somewhat popular altcoins, there's no risk, there's no worry that it's not going to happen. So I believe it will be priced in. The only contrarian argument I will throw out here is because the halving would go from 25 to 12 Bitcoins every 10-minute rewards, and there's really competitive mining going on right now. I don't know if you guys have noticed a huge bump in the hash rate. I think going into these last 6 months, there is a real serious race between miners to get every single block reward before the halving. And that's why there is serious competition to get as many of them as they can, because they know in 6 months, their profits get cut in half. And my theory, with no evidence, is that some of the bigger miners that are well-financed are going to be saving some of these coins and maybe selling them after the halving in order to smooth out their operational costs. So I can actually see more coins relative to the reward, because the reward will be priced into the market. The traders know how much is going to be coming in, but they might not be anticipating that miners would be selling more than they're making after the halving, because they've saved and prepared and hedged their expenses going forward. So that's the only thing I'm throwing out there.
Could that be affecting the price now? These miners holding back?
It could be affecting the price now, that it will go up more than it should into the halving, and then everyone would expect it to fly up to the moon like it did in early 2013. And when 90% of the public is expecting something, it almost always tends to do the opposite. So if there's a big run up into the halving, I'm expecting a pretty serious correction right afterwards.
So more contrarian investing.
Yeah.
One of the interesting things, I mean, as Steve commented, Bitcoin, by definition, by its nature, is deflationary, not an inflationary currency. However, we're in the early days, right? And part of the mechanism that Satoshi put forth to gain distribution of the currency was, in fact, to allow the miners to receive these awards that are still fairly substantial. So we're actually in a way in an inflationary period, and despite that, throughout all these years, we've still grown, and as we start getting into later and later years, it'll move to much more deflationary, where the increase in supply is a much smaller fraction of the total available supply. So that could actually get quite interesting as well for the price moving forward.
Yeah, there's a lot of talk about Bitcoin being a deflationary currency, and that's true in its the way it's designed. But yeah, currently it's more inflationary.
Yeah, in the strict economic definition of inflation is the increase in the money supply. So right now we have an increase in the money supply at the rate of 25 coins every 10 minutes on average. So we are seeing an increase in the money supply. At the moment, the demand is exceeding supply, so price is going up. And but I think another reason for the current price movement is it's just the normal cycle of the market. We had an overbought situation, and now we have an oversold situation. So all the weak hands get thrown in the towel and dumped their coins. Most of the people holding it now are those who are they're not going to sell at any price. So when that happens, a floor begins to settle under the market. And now we see, I believe, the beginnings of the next great big run-up. And so we have a small number of people in the crowd here tonight. Obviously, it's the season and Star Wars and all those things at opening night. But watch what happens when Bitcoin crosses the previous all-time high in the $1,100–1,200 range, and you're going to see the headlines are going to be crazy all over the news. You're going to see the masses come in, and we're going to have huge rooms of people because that price is a signal to the marketplace that something's going on here. And so I believe the long-term holders, as Tone mentioned, there's over 300 people who have $6 billion liquid that they can tap into. And if just a few of them get into this market, the price is going to go ballistic. And we will see the big swings, but I think the long-term trend is up. But one metric that I looked at early on, and it's just a fun way to look at things. But I looked at the offshore banking sector. There's over $30 trillion out there for safety and privacy. And I calculated that and I said, okay, what if only 10% of those people discover Bitcoin and find that's a safer place to put their money because they can remove counterparty risk, they can access it at any time, they don't have to wait for banker's hours, they don't have to get anyone's permission to pull their money out, they don't have to go through the banking system to move it around. It's just 10% of that $30 trillion moves into Bitcoin, that's what, $3 trillion. Divide that into 21 million Bitcoins that'll ever be in existence, and that's $140,000 per Bitcoin. So every morning I wake up, I look at it because I look at a long term. I don't care about the daily fluctuations. I'm the long term. This is my long term savings. I look at that and I say every morning if the price is under 140,000, I'm trying to figure out how to get more. So every day I don't care about these little jumps and downs. It doesn't matter to me. It's irrelevant in the long term, I think. So, but I could expand on that, but I'll let you finish up.
Yeah, that leads very nicely to sort of the last question I wanted to do before we go to questions. Just sort of a heads up, we do in Q&A, since if you guys have any questions, start kind of getting that idea. Will has the mic, so he'll find you. But yeah, I mean, it's obviously the big question. The question everyone wants to know is what's going to happen to the price in the near term. So maybe Stephen will sit this around unless you have an opinion.
Right, I have the worst record in the near term, so I heard about it at 1, ignored it. I heard about it again at 6 or 7, tried to figure out how to buy it. The only way I could buy it was trading gold to someone anonymous, someone I didn't know halfway around the country. And by the time my money got there and I figured out how to buy it, it had ran up to 30. The day after I bought it at 30, it corrected down to 3 or 4. Sat there around the $8 range for a year or two, kind of like it's 200 in the last year or two. It's been on a slow decline. And I've been buying all along. I bought when it spiked at 110 and then corrected down to 70. And I bought when it was 240 and corrected back down to 60. And I bought when it was 1164. I remember in the morning I put in the order to buy and almost immediately after I hung up the phone, it went down to, I don't know, 64 again. It was incredible. So short term, it's all over the map, but I think a lot of the blood in the streets has already happened the last 24 months. I think we're early stages of a big run-up. So.
Yeah, I'm of course quite optimistic. I very much, I guess, represent more of the long term as well, than actually having any real meaningful insight on the short term. I think, as Tom mentioned, the run up from 1 to 30, that was a 30x. The one after that, 20x. The one after that, 10x. This next one. I think it is likely going to be a single digit, but could be.
Even if it's 5x here, that's 2,500 a coin.
Yeah. So I was thinking my thought is we'll kind of continue.
So Dave's prediction, 2,500 coin.
I say 3,000. I'll go on the record, 24 months, 3,000 of Bitcoin. And you can all laugh at me in 24 months. I don't care. I already admit I've been wrong.
I was actually going to go a little more bullish than that, and I'm being yelled at or being criticized lately for being too bearish. So yeah, I try to actually, in my writing, I try to do my best between technical and fundamental analysis, and I go out there and I try to predict and give my opinion of both short-term, medium-term, and long-term. And they say the golden rule: don't ever try to predict both time and price because you will never ever be right. I have attempted to do this, not very successfully on both counts. I've been spot on time, almost to the day, a year in advance. But I also tried to predict the price, and I was a little off on the price. I stood behind that prediction. I called the turnaround in price from a downtrend to an uptrend to be the week of June 15th of this year, and I did that a year prior. It's in an article on CoinTelegraph at the time. So if people are looking for it, there's an article called Introduction to Time on CoinTelegraph from August 31st, 2014. And in that article, it says that look for a reversal in trend the week of June 15th, 2015. And it explains how I derived at that date. Though at the time, Bitcoin was about $600 coming from $1,200, and looking and analyzing a date a year out, I had no idea if that was going to be the new all-time high and we start to go down, or the new all-time low, not all-time low, but the final low, and we start to go up. Going into 2015, it was clear that it was going to be a low because Bitcoin was already under about 300 at the time. I was right on the day, but I did expect Bitcoin to go lower. I was looking for like low 100s around that time. Ironically, the week that I expected it to turn trend, that was the week that the Greek banking system shut down. That was a straight up coincidence, but sometimes in that.
Or you know something.
No, I suspected Greece, but I didn't know when it was going to shut down. So as far as my thoughts on the price, I personally think right now we're a little overbought. I didn't see any real demand, any real drivers to take us from the 230, 210, straight up to 500. I know we're at like 450 now. I've been saying we're overbought for probably few weeks to a month. It still hasn't come down to the levels I want to see. So I think we're temporarily overbought. Of course, we could go up that 5x at any moment. My personal opinion is we'll come down a little bit. People are going to be very curious what happens at the halving. I can see us having a bump into the halving, then a little sell-off. My next time prediction is out into 2017, and I think Bitcoin will do really, really well. I am also looking for that between 5 and 7x increase. So I'm eyeing Bitcoin to be, I would say, between 4,000 and 8,000 going into by the end of 2017. So I'm actually a little bit more on 2017 and 18. I try not to project 10, 20 years out. I try not to go more than 2 to 3 years. And I do see Bitcoin.
This internet fad thing might be over by then.
Yeah, I see it pushing the high single thousands, like 7,000, 8,000 even, within the next 2 to 3 years, because once it breaks 1,000, it goes up. I just want to comment on one more thing you said, that you were buying on that first bubble up.
Yes.
And you bought into the top, and then you watched it go down 98% to $2 from 30. I was one bubble behind you, sorry, after you, right behind you. And it was on my radar then, but I ignored it. And I was buying on the bubble into the 260 on the Cypress thing. I was buying into that bubble, and then I saw it drop from 260 down to $50. So I had a 75% correction. And then I was like accumulating all throughout. So I can only imagine how many people were buying on that bubble to 1,000. And most of them are probably still holding, because you held through from then, I held through from mine. So the next batch will probably be bigger.
Yeah, I agree. I mean, that every time we hit new highs, it brings a whole new crowd of people in, and then we go through that whole correction process. But yeah, once we break that previous all-time high, resistance becomes support. So once it breaks there, the media frenzy will be incredible. Also, I believe the attacks by state actors will probably accelerate. And but once it slingshots through that and it tests that support, I think it's a moonshot to 3,000, maybe 8,000, 10,000, like you're saying, in a short period, then a pullback again. You know?
And I'll be honest with you guys, just take a look at the chart, take a look at the prices. We had a bubble of 30x, 20x, 10x. You really want the next bubble to be less than 10x. If the next bubble is more than 10x, that would actually make me nervous, because that correction would be devastating. You don't want, it will be awesome in price. If Bitcoin, like, you know, we're at 500 now, if the next exponential rise takes off from like $700 or $750, let's say, we get the next big move, big adoption move, big crowd of people coming in, and it's 8x or 7x, that 8 times 8, 8 times 7, we're talking 40, 50,000 a Bitcoin. It seems like a lot, but that would be a smaller bubble than the one in late 2013, and that's what you want. You don't want the next bubble to be bigger percentage-wise than the previous one. That would make me extremely nervous, and I would say people are gonna feel a lot of pain.
And it's also the black swan situation, though, that could turn everything on its side. And the black swan event is the final collapse of fiat currency. And 2008, we almost saw the complete destruction of the financial system. It was papered over and lots of liquidity was pumped into the system. I think we're what current U.S. debt, anybody know the number now? Last I checked was 18 trillion.
Yeah, it was like 18, 19 trillion.
Okay,
Okay,
the 2008 financial crisis, Bitcoin wasn't around. So if a similar crisis were to happen again, Bitcoin obviously.
Yeah, so the black swan event is, as I mentioned earlier, these fiat currencies, because they're managed by central bankers and politicians, and you know, they're all going down the toilet at different rates of speed. Many of you heard that expression before. And the dollar has actually been real strong because these other currencies, they're jumping that sinking ship into the dollar because it's the strongest one at the moment. So the dollar strengthens and it looks good for a short period of time, but it's a head fake because it's mathematically impossible to pay back $18 trillion, even if we went to 100% taxation. So how do you deal with that? There's only two ways, and you can't defy economic law forever. You can postpone some of these things. But it's like defying gravity. You know, the only way you're going to pay off that 18 trillion in debt is an outright default or a quasi default, which is just inflating the money and printing it to pay it off. So we have a Zimbabwe event or an Argentina event where it costs you $1 million to buy a postage stamp. So the ultimate long-term price for Bitcoin, in my view, is infinity if you're talking in dollar terms, because the dollar won't get you. I guess it costs the next couple of months.
It's a moving measuring stick, right? So you get, I mean, all the other currencies that are declining versus the dollar, they're declining versus a measuring stick that's moving, right? So it's kind of interesting in that regard. But I mean, I couldn't agree with you more with regard to, you know, how actually close things came in 08 and also telling your thoughts on Europe. I would probably just differ slightly. I think there's, with regard to the developing markets that I want to come back to, I think and maybe call it a mini black swan, if you will. You know, clearly Zimbabwe, but we already see this, you know, again, Argentina and Russia and Ukraine that have their currencies are incredibly challenged right now. And and it really is just, you know, providing access for those individuals, which is, you know, easier said than done.
Yeah, there's been a lot of discussion about Argentina, the idea of getting Bitcoin in Argentina, but we haven't necessarily seen a lot of activity there yet.
I'm hearing it's pretty popular over there. Actually, I want to go there sometime this year. I got to see it for myself. If I'm not in that country to see it, it's really hard to know what's really going on. I am going to go in a slightly different direction than you, Steven, on that. The $19 trillion debt honestly doesn't worry me. I don't think that's the problem. Especially for the US, we still have the strongest economy in the world. We have some of the brightest people in the world, even though they're slowly leaving, and soon they'll be quickly leaving. But it's not the debt that really bothers me. And also, if we default on that debt, so what? No one is going to invade the US. As it happens, not going to happen. What worries me is the 120 trillion of unfunded liabilities. That to me is infinitely worse because, like I said, if we default on the debt, so a few countries are kind of pissed, and we're not even sure who we're defaulting on. Who do we borrow this money from? The Fed? Printed money? So it's still a question mark. But if we default on those liabilities, and we already slowly are, if you pay attention to the news, and I'll give one example, that's a problem, because defaulting on liabilities, that's when people from within start attacking your government or people that are working with money. It's the policemen, it's the firemen, they just stop doing their jobs. If you default on their pensions, if you default on their, I see that as the real problem. And defaulting like that is already starting to see. The best example that I can come up with, even though it's on the state level, not the federal level, but I find them to be fairly similar, is I go right at the simplest government program a government can possibly run. And normally I ask people to take a guess at this, but I think we're running low on time. To me, that program is the lottery. You convince a bunch of people that don't know economics or math or anything, that lottery works, and you get a bunch of money, you keep 40%, and then you give 60%, I'm just guessing on the numbers, approximate, and you give away 60% to one lucky winner. Take a look at the state of Illinois, who had to give out IOUs because they screwed that up. And what do you expect from 120 trillion in unfunded liabilities? So that's where I see the real crack coming in.
Obviously, a lot of topics. Let's go ahead and do our first question while we're still on time. MK here with the first question.
All right, thanks for all your insights, guys. I really enjoyed them. So you all seem really bullish on the price, but what do you identify as realistic threats to your predictions in the coming months and years?
Oh, shucks, yeah, they asked that. It's raining on the parade a little bit here now, so.
Good question.
So I'll just add a few things real quickly. As I mentioned earlier, there is ways different economic actors can attack Bitcoin. And I think they'll be short-lived and ineffective, and it may cause pain in certain areas, but it'll cause capital to flow to other areas. So we have this game theory, and I'm talking about state actors, where the only way a full outright ban on Bitcoin would be successful is if every nation state did it simultaneously and equal enforcement. And the chances of getting all of them to agree on that together are going to be very slim to none. There's always going to be one defector who wants to attract that capital and talent. And so while we may have, you look at the fall of the Soviet Union, yes. So they had a lot of pain and suffering, but a lot of that capital flew elsewhere. But they also had a thriving black market. So there was, they traded dollars in the underground markets. That was the only way you got things done. Because in the managed economy, you couldn't get anything done. So yes, we could be damaged by things like that, but it would be short-lived, it would be temporary, it would be difficult. But I like to consider the alternative as well. So that's one thing. You guys can think of a whole lot of other things. So I'll add something in a little while.
So I want to come back to that one as well. But I mean, from my perspective, the only thing that stands as a risk to Bitcoin over the long term, for that matter, is the centralization risk. If Bitcoin effectively stays decentralized, it will succeed, full stop. And that said, there is some potential. This is maybe where we get to something that I don't feel quite as strongly about. There's potential risk there with regard to whether it may become more centralized, full nodes, mining, so on and so forth. I think if there is some big event that creates some type of scare where there's
Trump presidency?
Yeah. For example, if two enormous, mining groups that exist out there somehow merged or did something like that. I mean, if there was some type of event that it was an indication towards substantial, significant increased centralization, that I think would be, a significant risk that was meaningful. On the regulation, I actually am not quite right now for the near term. I'm not that, I'm fairly, I don't want to say bullish, but I actually don't think it's that big of a potential risk right now. I think it's interesting that the most negative governments so far have been like, what is it, like Venezuela, Bolivia, Russia, right? If these governments, for the US and Europe to go out and actually like follow those countries, it's just, I don't see it happening. They've been, for the most part, a lot of them have actually, taken some, there's been a balance of some that have been kind of, a strong recoil, different individuals within US and Europe and so forth. But then there's been a lot of others on the other side of the fence. I mean, there are senators out there that are like really pro Bitcoin and are rah-rah Bitcoin, which is, exists, and it's interesting. So
more than two?
Yeah, probably. Well, I can name one. So,
Okay.
so I don't know.
But then optimism comes in, the number gets larger.
Yeah. So I honestly don't think the final piece on regulation. I mean, if you look at it optimistically, that should be nothing more than a reflection of the individuals and citizens and so forth. And I think one of the things that Bitcoin does is drive more and more transparency. And I think that one of the challenges with the financial system today is there's so little transparency in it. So therefore, individuals and citizens, it's not actually, there's a gap there where the regulation doesn't actually reflect, what citizens would, normally like to see happen, because there's so much of a kind of opacity, between individuals and the financial system. So kind of as more transparency drives out there, optimistically, you might think that, regulators would kind of, continue to move in that direction. So.
All right, so before I answer the question, you mentioned Donald Trump presidency, and it's just like something clicked. I was like, just like yesterday, I think it was yesterday, or maybe the day before, I was convinced that I should be an open supporter for Bernie Sanders because his socialist policies would be the greatest thing ever for Bitcoin adoption. So I'm really, it was a very interesting
Bitcoin.
Hmm?
Definitely more of a libertarian crowd in the Bitcoin space.
Yeah.
I understand that comment.
So that was a very interesting thing someone said to me. So it's funny, I have a slightly different view than the other two panelists. The concentration of mining honestly doesn't scare me at all. That is, this is the difference of opinion. I just came back from Hong Kong 2 weeks ago from the Bitcoin Scaling Conference, which is different than most of the other Bitcoin events. It was filled with Bitcoin developers and miners and everyone else working on that Bitcoin technology.
It was really nice to see the developers and the miners kind of communicating, working together.
Oh yeah, it was great. And perhaps when this video goes up, we can put some of the links to the videos from that event. One of the panels on that event was a mining panel where the top 7 mining operations, where there was a representative from all of them on one stage, and that has never happened before, and it was a very open discussion about mining, and it was great. It's something everyone has to watch. My takeaway is that I'm not worried about mining concentration, though I do recommend people watch and make up their own mind. The one thing that does worry me is, right now, it doesn't worry me yet, but it depends on who the Bitcoin core developers are. And to me, the most important property of Bitcoin is fungibility. It is significantly more important than scaling, than block size, than transaction costs, and then virtually anything is fungibility. Making sure that each Bitcoin or each Satoshi is indistinguishable from any other Satoshi. Right now, the core developers of the Bitcoin code, in majority, believe that this property is the most important. property in Bitcoin. If that view changes and other priorities come in on top of it, that would worry me. So as long as the developers are attempting to make sure that Bitcoin will be fully fungible and continue to have fungibility, I would be confident that Bitcoin is here to stay. And in my opinion, regulations are irrelevant.
And if anybody wants to look up what Tom was talking about, fungibility, there's some developers, the idea to like blacklists is the term you can look up. Essentially, if coins are stolen or used in criminal activity, you kind of like track them. These coins are worth less at that point.
So just as an example of fungibility, probably the most fungible thing we have right now is the dollars in your wallet. And even they aren't 100% fungible because they all have an independent serial number.
And
So
RFID.
they're almost fungible.
And RFID.
And inside the bill?
Yeah,
What did that happen?
it's not verified, but I think you can do the math. And what I mean by that is Google, and I'm going to say RFID, maybe I'm using the wrong term, but it's now in dust form, in ink. And so I'll give you an example. I know someone personally who crossed the border with his car with $30,000 in the trunk. When he came across the border, they interviewed him. How much cash do you have? Well, I got a couple thousand. I thought, no, I'm going to ask you again. How much cash do you have on you? I just got a couple thousand. Okay. We know you have in the trunk of your car $30,000. So now answer us again, how much cash do you have on you? So, yeah, the dollar is...
No, but how do you know that wasn't like somebody didn't like snitch or rat on him? How do you
well,
know
we
that
don't.
was
So this
physical?
is circumstantial evidence, but again,
The fungibility is very important.
where there's smoke, there's potentially fire, and be wary of it. That's all I'm saying. But now the other thing, to fungibility, I agree with you. That is a big challenge. And in the Bitcoin space, I think that's going to be solved in the next 12 to 24 months.
And I think that's another thing that gives the confidence in Bitcoin. We don't have fungibility. That's why people say Bitcoin isn't fully anonymous. It's pseudo-anonymous. And one of the things that goes into the pseudo-anonymity is the fact that Bitcoins aren't exactly perfectly fungible. Because you can kind of trace and track where they came from, where they've been used. And one of the reasons why Bitcoin is worth the way it is, and some of the earlier adopters are holding on to it, believing in it, is because I believe that fungibility is coming. If I felt that fungibility wasn't coming, or it was going to reverse into the opposite directions, into being less fungible, I would not be as bullish on Bitcoin as I am today.
Any other questions?
So John, you guys have talked about like Zimbabwe and Cyprus, but in general, those are countries where by the time their currency collapsed. And so those are not the people who will ever buy Bitcoin. You don't buy Bitcoin when your currency collapses, you buy it when you're afraid it will.
Correct.
You gotta do it before.
Correct.
So in theory, Sweden might be a better example of people who would buy Bitcoin because they're not, currency is going to collapse, it's going towards negative returns. You put money in the bank, you get less money out. Those are the kind of people who are more likely to buy Bitcoin.
Right. So like I said, when the Italian banks close and collapse, they're not the ones buying Bitcoin, it's the next country over.
Yeah, so in general, if you assume that your European Union and they'll pass that along, then don't you think Europe would be a more likely place for people to start jumping on Bitcoin than places like the US where currency is going up?
Yeah, yes, that's what I think. But they don't recognize it yet. That's why they don't show up at Bitcoin events. They need to see it. It's hard to convince a person to get into Bitcoin. They have to see it for themselves.
They have to feel pain oftentimes.
Them or someone they know real close to them. And I don't know, in Europe, they just...
You don't think negative interest rates?
That is pain. Yeah, no, I agree.
I mean, everybody will see negative.
They'll see it. They'll see it.
Some sooner than others.
So this goes to sort of talking about peaks in price when they happen. One thing that I've noticed is that usually when economists and people talk about money look at bubbles, the sort of hallmark characteristic is that the drop. The downside of the bubble is twice as fast, or faster in any case, than the upside. And so far as I can tell, in all of the bubbles or panics that we've had in the price of Bitcoin so far, that hasn't been the case. At maybe the very top, it was a little bit faster, but the majority of
The ultimate bottom.
slower. Yeah, going towards the ultimate bottom has just overall been maybe about half as fast. So now Kindleberger, in his book about manias, panics, and crashes, attributes this to leverage speculation. And I think that, that's been somewhat limited in Bitcoin so far. Do you see that changing? Do you see that as a factor in this? Do you see the sort of amount of leverage speculation going up and possibly also altering these sorts of dynamics?
It may sound like there is a lot of leverage in Bitcoin. I honestly don't think it is. My best guess, maybe 10, maybe 20% of all Bitcoins out there are actively traded, and I'm being generous. So even if you leverage that at 20 to 1, so I know some exchanges are 50 to 1, but also keep in mind that all those exchanges that are offering leverage above 10 to 1, they socialize losses. And what that means is the exchange doesn't take a big hit. If everyone is leveraged long at 20x and it crashes, and the exchange is looking at taking a big loss, they're actually taking away profits from the winners on the other side of those leveraged contracts. Which is why I'm not too worried about a complete collapse of the system, because the exchange in that exchange can't fail, because they're social. It may not be right, but that's what they're doing. Some of the other exchanges that don't socialize the losses, they don't have that great of leverage. The recent crash that happened in Bitfinex, it might have not been as bad if they also didn't have technical difficulties at the same time. I heard people were trying to sell their positions and it didn't work, so they hit the sell button again and ended up selling twice. So all of a sudden, but it was, so I'm not too worried about that. As for the crashes after the big rises, it actually depends how it rises, right? Because if you flip the chart upside down, not all peaks happen exponentially. So what happened in the financial crisis of 2008, we had this quick fall, but we got there kind of slow. But when the peak happens really quickly, then there is a quick fall, but then it kind of slowly goes down to the end. If you want to see an example of this outside of tradable assets, look up the historical population of Rome, and you'll see it go exponentially into 1.5 million around 400 AD, and then crash as Rome collapsed. And it did the stereotypical anatomy of a bubble in the population of Rome, and the population of Rome fell like 50% pretty quickly, and then it had that return to range we're okay, and then fell further, and bottomed out 1,000 years after the peak at 17 or 20,000 people. So we're talking a 98% reduction in the greatest city in the world at one point, right? So it's, you can't predict the top, in my opinion. It's hard, you don't know where the bubble ends, you just don't. I think it's, if you do proper time analysis, I've seen it get predicted correctly. I think I got the last time prediction right, I didn't get the price right. My next time prediction, I believe, is August 2017, so let's see what happens then. If I see prices going exponentially up into August 2017, I think this time I'll listen to my analysis from years in advance, and I'll probably like short it or sell a bunch of it then. But at what price it will be, it's hard to say. It really is.
So I'm going to go to the last question, because I want to give people a chance to kind of socialize, and then after this, we're going to go over to Grape and Grain, which Stephen, you were saying earlier, it's important with Bitcoin. Prices, items are measured in how much they cost in Bitcoin. Grape and Grain actually does price in Bitcoin for our event. They accept Bitcoin only when we're over there, and they actually say up on the menu usually how much the drinks cost in Bitcoin. So we'll head over there at 9. Last question. Go ahead.
I'll keep it simple. So say I see tomorrow that Italian banks are in pretty close to default. What do we expect the price to be come turn of 2016 based on that effect?
I think we would push into new all-time highs.
That's bullish. Yeah, I don't know. Tone is undoubtedly an expert, so maybe we should just go with what he says. But that feels extremely bullish to me. I mean, we of course saw it happen in Greece, which is fraction of the size, of course. Greece was in some ways the indicator, the wake-up call. So maybe the second one is in fact going to be that much more significant.
I'll just add one more final, maybe it's a final thought, I don't know, but something to think about. I challenge every one of you to, what's that? Oh, Paul's question. Well, to directly answer that question, I tend to agree with Tone that we might see all-time highs, pushing them really close by the end of well, 2016, we're almost done with, well, yeah, we got a little time, so yeah, I can see that. I can definitely see that.
3 weeks. If it's tomorrow, if they don't open on Monday, I think 3 weeks is enough to push into new all-time highs. If Italian banks don't open, today's Thursday. If they don't open Monday, I can see it.
Absolutely. So that's what we call the melt up, So maybe that'll happen in Bitcoin. So if you're trading, I think Tone would echo this too. If you're a long-term bull in Bitcoin, trade with a very small percentage of your position because you don't want to be out of the market if we do have a melt up. The hyper Bitcoinization, as some people have said in articles that are very good.
Right, like people, they'll trade actively and then they'll realize later if they just had held, they would have made more.
Right, they got out of the market and it went away.
I know football friends who have stories like that.
What's that?
Just buy.
Just buy and hold, yeah, hold as they say. But just the food for thought I wanted to share with you guys is I challenge each one of you to go home and pull up your bank account holder agreement that you have with your bank or you have your funds sitting at right now. And if you don't have one, ask them for one when you go make a deposit or cash your check and ask it and read the fine print. And the one I read recently from Wells Fargo, anybody have a Wells Fargo account in here? All right, good. Okay, here's what it says, and I paraphrase it. It says, "We reserve the right to freeze your funds for any purpose at any time for any reason and turn it over to any third party without your consent if we deem it's a justifiable purpose." Absolutely. So the only thing you own is promissory notes in your bank accounts. So a lot of people say, let's help the unbanked get banked. No, let's help the banked get unbanked. Yeah, it's going to Bitcoin. There you go.
That was good. Well, one last comment, because I remember a previous question talked about the Zimbabwe and some of the other hyperinflations that we had. I'll make this quick. I always see hyperinflation as a political event first. People lose faith in your government and they just start pulling out cash, and the government resorts to printing, causing hyperinflation, which is why I don't see it in the US. It's still pretty stable. But we also talked about black swans, and this is the part that I forgot to say in that answer, is I will take a shot, since this is a predictor kind of panel, I will take a shot at the next 1,000 event we had before, the real estate and .com before that. So my black swan guess on the next event would be a loss of faith and a collapse of government debt, which is something hasn't happened in 70 years.
Okay, with that, we go ahead and bring this to a close. I wanted to, of course, thank Brett Noyes and Draper University for all the help. Brett's right back there. And for all the students we have here. Obviously, Airbits and Rick Chan for helping me share all this information. And then our main sponsors, of course, Boost VC, the law firm of Perkins & Coie, and payment processor Seraph. And with that, we're all going to head over to Great Grade in a bit. So thank you so much for coming out. Thanks for your curiosity.
man, you came late. Sorry, you missed it all. You gotta catch it on video.